to the Wall Street Bull. My name is Anthony Troiano. I'm the founder of AJT Jewelry here in Melbourne, Australia. I'm an entrepreneur. I run multiple businesses across many different industries and a big believer in multiple sources of income for yourself or family. So one of the reasons why I wanted to start this channel was the stock market. Now, I've been investing in the US stock market via the app called Stag. Now, Stag is the Australian version of Robinhood in America. So Stag allows you to buy fractions of shares with no commissions. The only thing you'd have to pay for is obviously the FX currency transfer. So for us Australians to buy US stocks, we need to obviously change money into the US dollar. That for many years has been a bit of a nightmare because the Australian dollar has always been worth less. So essentially we lose half our money when we transfer over to the US dollar, which is annoying, but what do? You can't change that. It's always been like that, but it's a great opportunity for Australians to start investing in the US stock market now via the app Stag. Obviously backed by a company in the US called Drive Wealth. So they are quite secure, and I hope they'll be around for a very long time because obviously I'm planning on dividend investing for the rest of my life. So I'm wanting to do that for a very long time. So in Australia, we haven't had many options for investing in stocks other than Acorns, which was an American company that sold some software via an app here in Australia, and that they ended up getting bought out, and they changed the app from Acorns to what they call Raise. So essentially that's in the Australian stock market. You can pick a portfolio, whatever you choose is like an aggressive to a less aggressive or conservative, whatever you choose. And that essentially works off your debit card purchases. So essentially if you go to the shops and buy, say, I don't know, a bottle of water, that bottle of water, the app would round up your purchase to the nearest 10 cents. So it would invest that 10 cents into your portfolio automatically, and it does that every time you make a purchase. And obviously you can do a one-time investment every week or month or whatnot. So you can invest, $10 to $10,000 every week or month or whatever you choose. So that's all automated for you. It doesn't really give you the option to pick stocks and decide on what stocks to buy, which is kind of annoying, but it's a good option. But Stag is the new baby in Australia, and I love it and have been using it now since September 2019. So essentially I've been investing in dividend stocks to build my dividend portfolio. Now, a dividend is obviously the profits that a company will pay to their shareholders. Sometimes companies pay monthly, they'll pay quarterly, or if you're like Disney, they pay annually, so once a year. So it really just depends on, what you'd like to invest in. Or you can obviously invest in growth stocks, which like Tesla or SpaceX, which is one I really love. So it just depends on what you sort of have in mind to invest for your future. But me personally, I'd love to invest in dividends and get those profits and dividends every month or every quarter coming in, which is a great source of income if you build up a large enough portfolio for yourself. So I've built up a portfolio of roughly about $3,500 or $3,700 US, which is roughly about nearly 5,500 Australian. So it is a huge difference there in the price, but it takes time and you have to slowly build it up. It's something that you can't build up instantly. It takes many, many months, if not years, to build up portfolios that generate enough dividends to live off, which is ultimately my goal, which would be, incredible to get dividends every month, but you've got to be careful and select blue chip companies to ensure that those dividends are, secure, and that companies won't cut those dividends during these, pandemics and whatnot. So you've got to be careful what you decide and what you pick. So, I've got a broad range of stocks, which I'll go through with you guys, and I'll show you my portfolio and be open with it. I'd love to do a dividend challenge where, I'm going to start obviously doing that now, where I build up, a dividend portfolio, and I show you guys what stocks I'm buying in the US stock market and we'll go through each one of those, and obviously whether or not they're a good buy, and yeah, we'll just keep building up and showing you guys, and hopefully you guys can pick up on the app if you're in Australia, and yeah, we'll go from there and keep building. All right, guys, so stick around. I'm going to put up a little video of my portfolio. I'll do a screen recording on my phone, and you guys can see that, and I'll go through each one of those. So make sure you like the channel and subscribe, because I'm going to be posting up videos once or twice a week on those purchases whenever I choose to invest and purchase stocks. So keep in touch and we'll go from there. All right, guys. Cheers. Peace.
All right, guys, welcome to my portfolio. The portfolio is currently sitting at $3,715.88 USD, which works out to roughly 5,500 Australian dollars. And as you can see, most of my stocks in this portfolio are dividend paying stocks. Majority of them are quarterly, and I do have my favorites, which are the monthly paying dividend stocks. Now, so as you can see here, I've got Apple, AbbVie, AGNC, AMLP, American Express, AXP, BNS, Berkshire Hathaway A. This one here was just a crazy purchase. I wanted to buy a fraction of this share because it was pretty cool to own a fraction, which is like quadruple 0.2 of a share of this company, which is hilarious. Doesn't even appear there, but its current market value is $8.17 USD. Maybe one day we'll eventually build up something big enough to buy this stock. So BTI, British American Tobacco, Caterpillar, CNI, Canadian National Railway, Cisco Systems, CVS Health, Chevron, CVX, Dominion Energy, Disney. A very good stock, but obviously going through the current situation at the moment. They may or may not cut their dividend. DUK, which is Duke Energy, EMN, EMR, EPR, ERF, ET, Energy Transfer, Flower Foods, FLO, Gain, GEO, GPC, GoPro, which is one of the stocks that I got for free when signing up originally with the app. IBM, IMO, an oil company, IRM, which is Iron Mountain, Johnson & Johnson, a very, very secure healthcare company. Everyone knows Johnson & Johnson. JPM, which is JP Morgan, Key, KO, which is Coca-Cola, Land, LA&D, LTC, Main Street Capital, McDonald's, MCD, Triple M, which is 3M, MO, Altria Group, which deal in a lot of tobacco products, Nike, NKE, NSC, Realty, which is a very popular stock among dividend investors because these guys pay monthly, OKE, OXSQ, PBA, Peak Property, PEB, which is Pebblebrook Hotels, PepsiCo, PFE, which is Pfizer, PGX, PM, Philip Morris. PSEC is another big one, a big holding of mine. I know it's a very volatile company, but they do pay monthly, and I'll just keep going with these guys. I mean, their price has come back up recently, but been a very good cheap buy for us here in Australia. QQQ is the NASDAQ index fund, so mainly technology companies. SAN, which is Banco Santander in Spain. I bought this a while back when I first started because it was a cheap buy, and they were paying a dividend at the time, but they did cut that. So I'm just holding these 2.5 shares here. I'm not doing much with those. S-Bucks, which is Starbucks. I bought this one a couple of weeks ago. It is a great buy, and they have a very low dividend yield. So, I mean, it is quite secure. SPHD is an index fund, which is, tracks the top 500 companies in the S&P 500. SJR, SPCE, which is SpaceX, Virgin Galactic. This one here is a growth stock, and it's a great holding, obviously, for a growth stock. I've got this as an IPO when it first came out, and I've been holding it ever since, and it has gone up here, as you can see. It has moved quite a bit from $10 up to $15. It did peak at one stage at $37, which blew everyone away, but it dropped instantly after that a couple of days later. What else have I got here? So I've got SPHD, which is the S&P 500, but this is the the dividend paying S&P 500 index. Stag Property, which is investments in industrial. T-Mobile, Target, TGT, Tesla, everyone's favorite at the moment because of the recent SpaceX launch. UN, Unilever, UPS, and these are all my Vanguards. I've got VCLT, which are bonds, long term, VLO, VNQ, VOO, which is a very good one if you're looking for long term growth in the S&P 500. It is quite expensive, so I'm doing this one slowly. As shares are 283 US dollars, which is nearly 400 Australian. So it will take some time to build up in this one, but it does pay a little dividend here of 1.88%, which is quite low, so it has got a lot of room for growth. VTR, VXUS, VYM, WFC, which is Wells Fargo, the financial bank. WM, which is Waste Management. WPC, WRK, and Exxon Mobil, which is XOM. So my main ones that I'm currently investing in at the moment are Exxon Mobil. You can see here I've got 4.5, nearly 4.6 shares in Exxon Mobil, valued at 217 US dollars. This has dropped quite a lot because the oil prices around the world, the price per barrel went negative. So it went down quite a bit and was a cheap buy. They have a great dividend yield of 7.5%. So I'll definitely be investing more in Exxon Mobil. As mentioned, PSEC was one of them. T-Mobile is another great one that I will be investing more in the next couple of weeks. They have a great dividend paying quarterly at 6.72%. That's T-Mobile. SPHD is another one I'm going to be pumping quite a bit of money into because it is good to spread your money across all 500 companies in the S&P 500, which is the top 500 companies in the United States. Stag is another one I like as well, as it's part of the industrial sector and is a monthly payer as well. So it has a dividend of 5.33%. So it is quite good, pretty stable, and has been paying me some good dividends. What's the other one I wanted to talk about? Starbucks. I love coffee. I'm a huge coffee nut. So I'm going. This one was a new purchase for me. I put 20 Australian dollars. 21 US dollars, sorry, into Starbucks. So this one has a very low dividend yield of 2%. So it's got a lot of room for growth. And, it has gone up here, obviously, with the release of some take-home products there for Nespresso, which I just recently bought. Lovely. So it's a good stock to hold in your portfolio. These are consumer staples, so things you need every day. So it is good to have split and diversification with your portfolio. So you're not just investing in one sector, and such as real estate or finance. You've got to spread across a numerous amount of sectors. Commodities. You've got industrial. You've got real estate, and you should be investing in indexes as well. So I'll be investing in all of these companies as time goes on. Realty Income is also a really big position of mine. I've got 9.9 shares valued at 570 US dollars. Now, this is a monthly payer, and they have grown significantly over the last 3 years, you can see here. But as the current situation, the price did drop to nearly half price. So I'm trying to get as much as I can with that. They do have a dividend of 4.94%, which is the range I like to go for. Anything much higher than that is a risk, but you've got to take some risks, I guess, in life. But you've got to be aware that they do pay monthly, and that's a great thing if you're a dividend investor like myself. The other one I'm invested in is Main Street Capital. These ones are quite secure. They do have a 7.72% dividend yield. I do have 5.6 shares of this company, 180 sitting at 180 US dollars. They have been paying a good dividend as well, which is every month. So I love getting those monthly dividends, but obviously you've got to spread your portfolio out amongst other companies as well. Another one I was interested in is Gain Investment Corporation. These ones are a monthly as well. I own 9.9 shares of this, 112 US dollars. and they have a dividend yield of 7.43%. So these ones have been quite stable and secure, and it is a good buy for us here in Australia. Other than that, guys, so this is basically my portfolio here. I will be purchasing more in the coming weeks, and I'll obviously show you more of the stake portfolio, and I will do videos whilst I'm purchasing these stocks to show you guys how we do it here using the Stake app. Now, if I go through here in activity, you can see the funding of the account and obviously dividends coming in from companies every quarter every quarter or every month. Now, I've been paid by Gain, Land, LTC, PGX, SPHD is a great one at 52 cents dividend. Now, in Australia, we don't pay the full tax amount. We only pay 15% tax on those dividends, which is good. I think normally it's 30%, but because we're not US residents, we still have to pay some tax, which is 15%. So Stake do take care of all of that, which is good. And you can see some more dividends being paid out here. My best one is PSEC, which is a very risky stock to hold, but it does pay an awesome dividend at $2.85, which is almost, $5 Australian every month. So I will keep investing in that, but not as much. I'll just spread that out over the next couple of months. All right, guys. So as I said, my portfolio is currently at $3,715.88. I will be doing a dividend challenge, so I would like to build this portfolio up to something I can essentially live off, but it will take a long time. So it'd be great to have you guys along for that journey. All right, guys, so thanks for sticking around, and make sure you like and subscribe to the channel, and I'll be sharing my dividend purchases and stock tips and ideas, and would love your feedback as well. So stick around. All right, guys, thank you very much. Take care. Bye.